Welcome back to the Piper Academy, where we decode Bitcoin cycles, Fibonacci targets, and everything you need to know to stay ahead in the crypto game. Today, we're diving into this chart. We're going to take a look at the past cycle tops, trend-based Fib extensions, and what they tell us about the 2024 Bitcoin cycle. Has the top already come in at $108,000, or is there still room for a parabolic move to $167,000 and possibly much higher? Get your notebooks out, guys, because class is in session. Today, we're taking you step by step through the historical cycle behavior, the golden pocket targets, and the most realistic bullish and bearish scenarios for Bitcoin in 2025. Let's break it down. First, let's talk history. Bitcoin cycles follow a predictable rhythm tied to the halving events. These cycles are defined by three key Fibonacci data points: the low before the halving, the peak after the halving, and the low after the peak. We use these points to project targets for the next cycle. Here's the recap. In 2012, that cycle saw Bitcoin peak within the golden pocket between $1,078 and $1,655, with a peak at $1,242 Bitcoin. In 2016, that cycle saw Bitcoin overshoot the golden pocket significantly, peaking at $19,804. That was 76% above the golden pocket top. In the 2020 cycle, Bitcoin peaked just below the golden pocket at 69,000. That golden pocket range came in between 70,000 to $85,680. Bitcoin fell just slightly short this time of making it to the golden pocket. Now, here we are in the 2024 cycle, and Bitcoin has already hit an astonishing $108,000, breaking the 0.618 Fib level of 103.5K. But here's the question. Was that the peak, or is the real rally yet to come? Let's start with the bearish scenario, and I want you to listen carefully because history might already be repeating itself. Bitcoin very often fails to break above the golden pocket. It happened in 2020 and 2012, and here's the catch. Bitcoin's $108,000 high aligns closely with the 0.618 Fibonacci level at 103.5K. What happened next? A sharp retracement below $100,000. Here's where it gets even more interesting. There is an unfilled CME gap at $77,000. Historically, Bitcoin loves filling these gaps, often during bearish corrections. In fact, we saw this during the 2021 cycle when an unfilled gap from earlier in the year was finally filled in 2022 during the bear market cycle. It took the entire cycle for it to come back and fill this gap, which, by the way, was created right around the same time in the cycle as the current CME gap that we're talking about at $77,000. That definitely gives Bitcoin a target to shoot for if it continues on a downward slope. And here's the cherry on top of this bearish scenario. The Bureau of Labor Statistics Job Revision Report is due on February 7th, 2025. If you remember, the August 2024 revision revealed that the U.S. economy had 818,000 fewer jobs as of March 2024 than what they originally reported, with all the losses coming from the private sector. That report sent markets tumbling. If the February 2025 revisions show similar downward adjustments, it could amplify bearish sentiment across the markets. Bitcoin, already under pressure, could retrace further to fill the $77,000 CME gap and test even lower levels of support. In this scenario, $108,287 may already be the cycle peak, and the markets could struggle well into 2025, especially with added pressure from macroeconomic uncertainty. Now, let's take a look at the brighter side, the realistic bullish scenario. If Bitcoin can reclaim the golden pocket, there's a clear path to higher targets. In this scenario, Bitcoin pushes back into the golden pocket between 103.5K and 117.8K, and it holds. It finds support there. The next major target would become the 1.618 Fibonacci extension at $167,000. We discussed all this in the last video. If you haven't checked out that video, we'll drop a link in the description below. If you remember from the chart that we analyzed in that video, this $167,000 target is derived directly from the historical Fibonacci level shown here. Bitcoin has shown track record of aligning with these extensions, especially during cycle peaks. So if the golden pocket is reclaimed, this target becomes very realistic, and that would be $167,000 at least in this cycle. Some other factors to consider would be the Trump factor in the new political environment. Let's not forget, on January 20th, President Trump takes office. He has already made several pro-crypto statements signaling a policy shift that could reignite the market. He's made such statements as, "We're going to make America the crypto capital of the world," and has stated that he will replace SEC leadership Gary Gensler with the recent nomination, Paul Atkins, who was very pro-crypto. So what is the bigger picture here? The bearish case, Bitcoin peaked at $108,287 at the golden pocket, much like we've seen in previous cycles, and retraces to the CME gap at $77,000 or possibly even lower, could have a Bitcoin that struggles through most of 2025. This is very possible, especially with the added pressure from the February 2025 Bureau of Labor Statistics report. So what about the bullish case? Bitcoin reclaims the golden pocket, targets $167,000, and possibly gets much higher. And let's not forget, with Trump's pro-crypto policies, regulatory clarity, and historic trends, Bitcoin could easily recover from an early year retracement, setting us up for a parabolic move later in 2025. Why is this? Historically, Bitcoin cycles tend to peak in Q3 to Q4 of the year following the halving year. With the halving that occurred in April 2024, that would put the normal top for the cycle around the autumn time period of 2025. So even if the bearish scenario plays out in Q1 and we see a retracement that goes down to fill the $77,000 CME gap and possibly even further to retest key support levels, we could still see a resurgence pump that closes out the cycle with a much higher price point. This would look a lot like the price structure that we saw in 2021, where Bitcoin peaked in Q1 before retracing over 50%, only to hit a higher peak later on in Q4 of 2021. Also, don't forget that in 2016 cycle, we broke the golden pocket by 75%. If we were to do that again in this cycle, breaking that golden pocket by 75% would put Bitcoin's price at around $206,000, well above the $167,000 target if we hit the 1.618 Fibonacci extension. So that pretty much covers everything you need to take into account for this cycle and what we can glean from the charts and the data. Let's jump out and wrap this up. If you guys haven't checked out last week's video that we referenced in today's filming, be sure to go check out this video on our YouTube channel. I hope everyone got something out of this video. Remember, it's not meant to deter you or give you hopium. It's meant to make you aware and give you some knowledge, because in this game, knowledge is profit. Now it's your turn. What do you think? Will political changes or the golden pocket breakout drive Bitcoin to new highs, or was $108,000 the cycle peak? Let me know in the comments below, and don't forget, if you're serious about staying ahead in the crypto market, hit that like button, subscribe, and turn on notifications. We have 5 live shows daily, and we've got weekly breakdowns just like this to keep you in the game. I'm Army Piper, signing off from Piper Academy. Until next time, stay sharp, stay focused, and let's ride these cycles together.